The Gulf is going green and the money is following. MENA sustainable finance market just hit $35 billion. And the UAE has set a target of 1 trillion dirhams in sustainable finance by 2030. Joining me is Dr. Jelena Janjusevic, Deputy Global Head of Department at Heriot-Watt University in Dubai and MFTA member. Jelena, thank you for coming here and welcome to Wall Street MENA.
Thank you for having me.
Yeah, first let's start in plain terms and explain this to the audience now. What is sustainability in finance actually means?
Well, in very simple terms, sustainable finance is about making financial and investment decisions that generates financial returns, obviously, but considering also long-term environment, social and governance risks and opportunities. So I would say that it's important to understand that sustainable finance doesn't mean sacrificing profit for sustainability. It is rather recognizing that climate change, resource scarcity, regulation, change investors' preferences and consumer expectations are influencing this also result too. So we cannot disregard it.
Yeah, and when people think about sustainability, they think about climate immediately. I think this is the first thing that comes to mind. What is the three pillars, let's say, when it comes to sustainability?
Well, by definition, sustainability has three pillars. One is economic, another is environment, and third one is social. And you're right, somehow when we talk about sustainability, first thing that comes to our mind is a green, protect planet, save forests and so on.
Glass bottles.
Exactly, to recycle. Because it at the beginning it was really much more focus was on environmental side and environmental pillar. But more and more economics pillar is coming into the stage, and actually now the investors' preferences are changing, and investors are looking to invest in assets that is very much categorized as ESG, environment, economic, social, environment, social, and governance criteria are extremely important.
Yeah, definitely. And with now looking at the Saudi Arabia is now the Gulf's biggest issuer of sustainable finance with nearly $20 billion in 2025. What is driving that momentum in Saudi?
Well, before just one small digression, because it's very relevant for this region. I see that for the Gulf region, sustainable finance, and that's very important, is a tool of strategic economic transition and transformation, and that is very important. So not just environmental agenda. And UAE and Saudi are leading that way, and as you said, the Saudi's sustainable finance is growing significantly, and they are leading the way. And I would say there are three key elements that are important that are driving this. One is absolutely the government policy and the strategies. Another one is coming from the investor side, so investor demand, and third one is economic transformation. And if we want to look at the one specific document, strategic document that is driving all these changes, that is definitely a Vision 2030 of Saudi Arabia. And Saudi Arabia is investing already largely into the renewables, into the tourism, into hydrogen, sustainable transportation, big infrastructure project, and in general industrial diversification. And this is where sustainable finance is helping to raise this enormous amount of capital that is needed.
Interesting. The UAE also is targeting 1 trillion dirham in sustainable finance by 2030. That target, is it realistic? Is it achievable in that timeline?
Well, I believe all of us now so far learned that this government is really able to set up very ambitious targets, but we also learned that they are able to fulfill these targets. So I would say that it is ambitious, but achievable. And probably there are several factors that are influencing that. First is really that commitment that is coming from the government, and when it comes to sustainability, we have strategic documents at the national level that are directly to lead to sustainability. Second important thing is financial sector. So we have UAE banks publicly committed to raise significant amount of green capital and sustainable finance. And third, probably very important, is that both Dubai and Abu Dhabi develop sophisticated financial markets that are still attracting very much attention of the international investors, and this is very important.
Yeah, and speaking about companies in UAE in general, they face now mandatory emissions reporting for the first time. What does that actually change for businesses here?
Well, continuing to what we just said about that government commitment, this is one of the evidence of that commitment, because something that was largely voluntary now is becoming mandatory, and that means that it is becoming part of the corporate governance and business strategies. So for the companies, that means that in first place they need to look into the accurate and reliable data. They need to look into the data measurement systems that can measure emissions and that can tell them where in their operations it is coming. Is it coming from the operations, how they can improve operation efficiency? Is it coming from the supply chains and so on? So then they need to think how to decrease these emissions. So what actions they need to take, meaning they need to integrate climate risk into their decision making, and that's very important. At the beginning, they will probably look at that as a compliance measure, but over the time, in the long run, they will see that that will improve their operation efficiency, that will improve climate risk modeling, that will improve enhance ESG reporting. It's important that will improve their competitive advantage, especially companies who are working with international investors, international markets, and are part of these multinational supply chains, and majority of investors are. So I think what is important, two things I would say. One, investment follows certainty, and sustainable finance is providing this certainty. And second, data, sustainability data are becoming equally important as financial data now.
Yeah, Dr. Jelena, also you spent 20 years working with World Bank, with IFC, UNDP on macroeconomics. Do you think global institutions now, do you think they're ready for this?
Well, I think probably it's not a question, are they ready? They are ready. Probably it's more how they are supporting the overall businesses and governments to implement all what is in all these multilateral agreements, sustainable development goals, and so on. So I think that they definitely contributed a lot. They created a big contribution, but I would say that contribution is probably the biggest in recognizing sustainable finance as development issue. But I would argue that implementation still needs to accelerate. So I've been involved for more than a decade working on directly on sustainability projects in multiple countries with multiple international organizations, and they are important in one segment, and that is they have strength to reduce the risk, investment risk, and this is where they can help attracting private capital. Why is that important? Because financing and reaching and achieving sustainable development goals has one big problem, and this is financial gap. But financials are not enough. They are must, but not enough. So we need still committed institutions, we need regulatory certainty, we need skills, and we need ready projects. So they can help bridge that gap with, public finance, but we need private finance too.
And also, like a lot of people, when we're talking about sustainability and finance in general, they will think, well, I mean, is it gonna make me profit? Is it gonna make me money? Or not?
No, absolutely. So there is more and more evidence and a lot of research that is demonstrated that capital gains and returns on sustainable investment is producing, if not same, sometimes even higher returns. What is important is that it's reducing the risk. So we face with the climate risk, we are facing with the floods, we face with the floods in UAE, and insurance companies knows very well how much that cost them, but not just them, the businesses, the households. Sustainable investment is helping diversifying portfolio, reducing risk, reducing the cost, and creating long-term even return in a long run. And more and more investors are looking to invest in sustainability that can generate commercial value, not just environmental impact. So absolutely, it goes together.
Long-term profit and long-term return.
Absolutely,
as well. Thank you so much.
Thank
Dr.
you,
Jelena,
and thank you for initiating these important topics.